Regardless of how you look at it, you have to remember that getting a mortgage is just math. Don't take it personally. Don't be emotional. The bank is not out to get you, and they are not your enemy. It's going to come down to some simple things. It comes down to what I call SID. So your credit score, your income, and your deposit. We'll be talking about this in a lot more detail a little bit later. But one of the big mistakes that people make when looking for a mortgage is not going to a mortgage broker. Now, I'm not saying that because I am a mortgage broker. I'm just saying it because going to a mortgage broker is going to give you more choice, because mortgage brokers are going to work with more than one lender. I've been a bank manager at all the big brands in the UK, HSBC, Lloyd's, TSB. And one thing that I know, no matter how well my staff were trained, when they're speaking to clients, they could only speak to clients about the products that we sold. Going to a mortgage broker is going to give you more choice, that they can find a lender that matches your needs and your circumstances. I do also find that you get a higher level of service from mortgage brokers because mortgage brokers are reliant on referrals. When you walk into a bank and you speak to a mortgage broker or a mortgage advisor, you are trading on the bank's reputation. So I'm going to share 3 things that every home buyer needs to know. Everyone has a secret. It takes longer than you think, and it usually costs more than you think it will cost. My name is Anthony Lindsay, and I've been in finance for over 30 years, so I know a thing or two. Today, I'm going to explain what a joint borrower, joint sole proprietor mortgage is, and if it may be right for you. As you know, your home may be repossessed if you do not keep up your mortgage payments. It's very important that you understand that there are a lot of different products out there. And as a mortgage broker, it's my job to find you the most appropriate product. Everyone has a secret. So remember, everyone in the buying process and the selling process has a little bit of a secret. Sellers won't disclose all the facts. So you know that you've heard stories about people who have purchased properties only to find out that there's an issue with the roof or the boiler's about to break down. These are things that aren't going to be disclosed by either the seller or the estate agent. The estate agent's not going to tell you that because the estate agent, as you know, works for the seller. As a buyer, you're not going to disclose all of your information either. So if you know that your budget is $600,000 to buy a new home, you're not going to tell the seller that you have $600,000 or that you want to spend $600,000. It's part of the negotiation process. Solicitors and brokers are just doing their best to manage your expectations. So quite often, it makes it a little bit difficult if they're being delayed by a third party to just tell you, well, this deal is going to take a lot longer than you thought it would take. They're going to manage your expectations. And as a broker, it's my job to make sure that I'm always open and honest with you, that I try to get the best information from the solicitor, and also that I negotiate the very best price for you when you're purchasing that home that you want to buy. The next thing to remember is it takes longer than you think it will. I often talk to people and they've watched a lot of television. So they've watched a lot of these shows that are beautifully edited to make it look like buying a home is just a simple thing. You go, you speak to the estate agent, you may meet the seller, they tell you a little bit about their background, and then before you know it, you're moving in and doing your decorating. Well, the truth is that that is not the truth. Purchasing a home takes a lot longer than people tend to think. So it's always going to be as fast as the slowest person. So what I mean by that is if you're working with a solicitor that's slow and everybody else is fast, your deal is going to take a long time. If you're working with a broker that's slow and everyone is fast, the deal is going to take a long time. So you want to make sure that you have the right team of people moving as quickly as possible. And that includes you. Quite often, I find that clients just get caught up in the everyday life of living, and they don't respond to emails as quickly as they should. They don't send documentation over as quickly as they should, and that can delay the purchase process. So it's important that you respond to any request that your broker makes in a timely manner, and that you have the right people on your team. Life is very busy, and sometimes people go on vacation. So depending on when you're buying your new home, it may be coming up on bank holidays, or it may be coming up on Christmas or Easter or any holiday, which will mean that someone in that process is probably out of the office. Not everyone has someone to pick up their work when they're out of the office. So just be mindful that the home buying process takes longer than you may think that it does. The other thing to keep in mind is the timelines. If you're buying a new house, it takes about 4 to 6 months to go from offer being accepted all the way to you getting your new keys. In fact, the UK has one of the longest processes for buying a new home. Now, when I say 4 to 6 months, I'm talking about from the moment that the offer is accepted. It may take a month just to negotiate the deal. So 4 to 6 months is kind of an average. You will hear those stories from friends and family members about the unicorn purchase where the person went out, found the property the first weekend that they were looking, and 2-3 months later, they were in the new home. That's not a realistic expectation. So if you're looking to buy a new home, do give it 4 to 6 months for the entire process. And I would say that is if everybody is firing on all cylinders, if there's no chain, meaning the person that is selling the property isn't also trying to buy another property, because that can complicate things. So 4 to 6 months for a purchase. Then if you're remortgaging, that means you currently have a mortgage and you are now going to another lender. So you may have a mortgage with, let's just say, HSBC, and your fixed term has come to an end, and you have looked around and you've seen that another lender has a better rate. Just a word to make sure that they go about this the right way. You should always go to your broker with the deal that your current lender has offered. It is going to be a lot quicker and a lot easier sticking with your current lender, because new valuations won't need to be done. In many cases, you don't need to provide any additional documentation. You just need to accept the offer that maybe they've sent out to you. So in most cases, what you'll find is probably 3 months before that deal comes to an end, your current lender will send you a letter saying your deal is coming to an end. This is what we can offer you. All you have to do is let us know that you want to take us up on this offer. But you should take that offer to your mortgage broker, that your mortgage broker can search and see if that's the best thing available to you. Understanding that when you remortgage, there's a lot of things that you can change. You can change the remaining term. You can change lots of different things within that deal. So get your letter from your existing lender, take it to your broker. That way they have something to compare it to. So I did speak about product transfers. So product transfers take about 1 to 2 weeks. That is when you stay with your existing lender and maybe just go to a different product. So if you're doing a new purchase, that's going to take 4 to 6 weeks. If you're doing a remortgage, it takes 7 to 10 weeks. So that means you're taking your current mortgage to another lender. So a new valuation is going to need to be done. You're going to need to provide all of the things that you provided when you took out your first mortgage. If you stay with your current lender, which is a product transfer, that's going to take 1 to 2 weeks. Additional expenses are something that you need to keep in mind, because if you are purchasing a new home and you are going to be moving, there's going to be other expenses that you may not have considered. These expenses are going to come out of your deposit. So when you speak to your mortgage broker and you're explaining how much you have for a deposit, one of the things that you want to make clear is how much you have in total. That way they can give you a guide for how much some of the other things are going to cost. So you may need a moving van. There may be things that you need to do as far as light decorations before you move in. You're going to need to pay solicitors, and you're also going to need insurance if you're buying a home. Insurance on a home, so not a flat, insurance on a home is going to be a mandatory regulated requirement. So they won't complete on the mortgage if you do not have building insurance in place. In addition to your building insurance, you absolutely want to speak to your mortgage advisor about protection or insurance. So that would be critical illness insurance, that would be life cover, and that would be income protection. While you are taking out your mortgage, this is the best time to make sure that you have a will in place. You are going to be purchasing probably the most expensive thing that you buy in your entire life. So you want to make sure that you have a will in place. If you have a will in place, but you haven't reviewed it, now's a great time to review your will. So think about those additional expenses that come along with buying a new home or moving into a new home. Now we're going to move into what everyone wants to know about. What is a joint borrower sole proprietor mortgage? Getting a mortgage can be difficult. So it's so important that you understand all of the products that are out there and understand how they could potentially benefit you. So a joint borrower sole proprietor mortgage, or JBSP, is a mortgage where multiple people are on the mortgage, but only one person actually owns the property. So a lot of times this is used when parents are trying to help their children get on the property ladder, or if you have siblings that want to get on the property ladder together. This type of mortgage is a lifesaver for lots of people. The sole proprietor is the only legal owner and listed on the title. So the supporting borrowers can help with affordability, but they don't actually own the home. It's a good way of getting on the property ladder. And I think, in my opinion, it's one of the most underutilized mortgage types because a lot of people don't understand what it is. And some people don't even know that it exists. So why this matters? Getting on the property ladder is tough for first-time buyers. Now, don't buy into the myth or the lie or the marketing that you cannot buy a home. It's very rare that I'm unable to get someone a mortgage. In most cases, it's just that maybe I can't get them as much as they need to get the home that they want. Sometimes this can be easily resolved by them maybe looking a little bit further out. So the best bet is don't guess, don't think, don't talk to friends and family. Talk to a mortgage broker who can actually do an affordability assessment based on your unique circumstances. What tends to happen is people call me and say, oh, well, if I wanted to buy a house for this much, how much could I get? Now, that's a good starting point, but what I need to know is the specifics. I need to know SID, so your credit rating, your income, and your deposit. The best thing that you can do if you want to understand how much you can borrow or how much of a mortgage you can get is speak to a mortgage broker who will do an affordability assessment and then arrange an agreement in principle. You can then take that agreement in principle and search for houses that you can afford. Now, if you're a first time buyer, remember, this may not be your forever home. This may be that first home that you fix up, build some equity in it, and then step up from there. So when people say they can't get on the property ladder, it's usually because either they haven't displayed the discipline to save the money to get up and running, or maybe as a first home, they're they're shooting a little bit too high. This is also where a joint borrower sole proprietor mortgage can offer a creative solution when you don't have that income. So maybe you have saved and put a deposit together, but you don't have the income to meet the mortgage that you would need to get the type of house that you want. Sometimes this is used when a parent or a family member wants to help without being a co-owner, as I said. So it's kind of like the bank of mom and dad. How does it work? So all borrowers apply for the mortgage jointly. So everybody that is going to participate in this mortgage is named on the application. So each person is going to need to provide the documents as if they were getting a mortgage by themselves. This is really important because although you won't own the property, you are going to be evaluated as a mortgagee. So this means that the mortgage is going to be assessed on the profile of the very worst person. So if one of the people on the application has some credit challenges, that is going to be taken into consideration for the entire application. They're also going to look at the age. So if you have someone on the application, so maybe it's a parent and the parent is in their 60s or 70s, that's also going to affect what you can get and the term of the mortgage. So there is a benefit in the additional salary or income being put on there, but there may be some limitations as far as the term. So the combined incomes are used to increase the borrowing power. Only the main applicant or the sole proprietor is on the title, and monthly payments are shared, but only one person legally owns the home. So everyone named on there is jointly and severally responsible for that mortgage. So you wouldn't want to do a joint borrower sole proprietor mortgage with someone that you don't have confidence in or someone you don't feel is going to meet their obligation. As a parent, you know your kids, you know if they're responsible or not, but this is a great way to be able to support them. This product is, as I said, probably one of the most underutilized products. Different lenders are going to have different criteria. So you will find that some lenders require the person that is named on the application along with you that they are a blood relative. But there are other lenders that they just need someone that you trust and someone that trusts you. So it can be a friend, it can be a family member, it can be a work colleague, it can be anyone that is willing to do that mortgage with you. Here are some advantages of the JBSP mortgage. There's an increased borrowing power by using multiple incomes, as we said. Only the sole proprietor is on the deed, so there's a simplified ownership. Only one person owns the property. Supporting borrowers avoids second home stamp duty, so you would want to check with a solicitor on this, but it can be a way of that person, if they already own a home, so if it's a parent, they have the property that everyone grew up in, and they now want to help the child or the siblings get a property, they don't have to worry about that second home stamp duty. It allows for family and friends to assist without being the co-owners, because not everybody wants to be a co-owner. Now, we have to talk about some of the disadvantages. So this is the downside. This is the thing that people often want to know when they are considering doing a JBSP mortgage. So all borrowers are jointly liable for the mortgage debt. So that's an important thing to know. So if one of the individuals just decides that they're not going to pay anymore, the other individuals on that mortgage are now responsible for the entire mortgage. So it's not as if three people are on there and the payments are £1,000 a month, that one person is going to say, well, I'm only going to pay £333. It's not like that. Everybody is individually and jointly responsible for the mortgage. But in most cases, the person that is living in the home is going to make the full payment. They just needed assistance as far as getting their borrowing power up.
So removing the supporting borrowers can be complex and may require refinancing. What that means is, let's just say you have a person who needs a little bit of assistance right now because they're starting their career, their salary isn't where it needs to be, but the intention is that at some point they're going to remortgage. When they remortgage, if they want to take the other people or other person off the mortgage, they're going to need to meet the affordability and lending criteria by themselves. So you want to have a conversation and you want to understand what the exit strategy is, at what their timelines are. You want to have some assurances if you're actually going into this on behalf of someone else. You want to have some assurances that there's a plan, that there's a solid plan to at some point get your name off there if that's what you want. Fewer lenders offer JBSP. Now, going to a broker is going to be great because a broker works with a lot of lenders. So the moment you explore this option, they'll be able to tell you which lenders are going to be best for you. As I said, some lenders will allow people that are non-relatives. Some lenders will only accept relatives. Defaults affect the borrower's credit score. So everybody on there. So if, let's just say, the mortgage goes into a default, it will impact everybody's credit score. So it's so important that if you're considering this, you're considering it with people who you know and who you trust. But also, this is where having the right protection comes in handy. So if you're taking out this mortgage, even with the best intentions, life happens. So if one person passes away, if one person was to contract a critical illness, by having the right insurances in place, it will mean that either the mortgage is paid off in full, or there's money coming in each month to cover that person's share of the mortgage or the entire mortgage. So when you're going into the discussion about joint borrower, sole proprietor, you should also be having a conversation around what protection policies are going to be put in place. Who's eligible? Applicants must meet the combined income requirements. So what that means is there will be probably a minimum amount that as combined borrowers they make, or they sometimes are minimum amounts that each individual needs to make in order to qualify for this type of mortgage. All borrowers undergo credit checks. As I said, it is assessed based on the person with the worst credit rating. But going to a broker, they'll be able to assess which lenders have which criteria to accept what type of credit issues. So someone might have CCJs or defaults. They may have had things in the past. What most lenders are looking for is that for at least the last 6 months, you've resolved your credit issues, everything is up to date. So even if you've had a CCJ in the past, they usually want to see that it's settled. But even if it's not settled, they want to know that as of the date of the application, that you've been managing your finances well for at least the last 6 months. Some lenders will look for 12 months, some may look for 18, but as a rule of thumb, I would say you want to make sure that your finances have been well managed for the last 6 months, which leads me to another point. Don't wait until you think you're ready to get a mortgage to speak to a mortgage broker. This is one of the biggest mistakes that I see people make. What people do is they talk to friends and family and people that aren't mortgage brokers to get advice and guidance. They go out, they find a house, then they decide to go back to a mortgage broker to get an agreement in principle. That's not how you should do it. You should speak to a mortgage broker about 6 months in advance of when you think you're ready. The reason for this is a lot of things that we can do as mortgage brokers to put you in the very best position to get the very best mortgage that you qualify for. These things take time. So if it's something credit related, so you've had a missed payment or a late payment, it can take 6 to 8 weeks to update on your credit report. You may not have the money right then to resolve that. So if you speak to a mortgage broker 6 months in advance and they then they'll be able to tell you and give you a blueprint on what you need to do for the next 6 months. It may not need 6 months, but at least by having that conversation, you can tidy up your bank statements, you can pay off any small outstanding credit that you have, you can make sure you don't have any missed payments. And another thing that I find happens quite frequently is when people pull their credit report from Check My File, they find things on there that they weren't aware of. I have a client that I was dealing with a couple months ago who had something on her credit file that she was completely unaware of. No one was chasing her for the money. It was just a small 300-pound balance that had been sitting on her credit report for about 4 years. This caused major problems for her because she was unable to get through to the company because she no longer had an account. She did eventually get it resolved, but we had to delay taking out that mortgage, which caused some financial problems for her because her interest rate had gone onto the standard variable rate. So the best thing that you can do is speak to a mortgage advisor at least 6 months in advance of when you're ready. Some lenders limit the JBSP to family members, as I said. Lenders often want to see how the sole proprietor will take over the mortgage fully in the future. So as I said, that's about your exit strategy. You should have a plan. Your mortgage broker will be able to assist you in putting together the right plan. Some things to consider. If you're unsure or unclear, despite the fact that your mortgage broker will have explained everything in detail, given you an illustration, you should seek legal advice before proceeding, especially for the supporting borrowers. So the person that's actually going to be the sole proprietor, they're in a position where, the deed is in their name. But for everybody else, if you're unsure or unclear, you should seek independent legal advice to make sure that you understand what the product is and what the impact is to you. You should understand the long-term implications. I've talked quite a few times about your exit strategy. So make an agreement with the person that is the sole proprietor to understand what timeline they're on as far as refinancing. It should be someone you know and trust, so you should understand what their career trajectory is, and you should know and have confidence that they will maintain the payments and they will have that exit strategy in place and execute when it comes around. Make sure that all parties are comfortable with the shared liability. It's a great product. JBSP is a fantastic product, but it's something that you want to have the right conversations with. It's something that you want to do with people you trust. It's fantastic for siblings that, just want to get out of the parents' home and get along and want to live together. So I can't say enough about this product, and I just wish more people knew about it, because I think if more people knew about it, more people would look into it. And in looking into it, you might find that it's not the right thing for you, but not knowing about it, you won't even have the opportunity to look into it. So what are the next steps? So it can be a useful tool for first-time buyers needing support. If you are one of those people and you'd like to speak to someone, my information is in the description. You can book a free consultation. I don't charge for a conversation. You don't pay for a conversation. I'll answer all of your questions. I can do a financial assessment on your behalf. That way you can know realistically how much you can borrow as an individual. And if we then get to a point where you find that you're unable to get the size mortgage that you would need in order to buy the type of home that you want, and you have a friend, family member, parent who's willing to have the conversation, I'll have the conversation with them as well and go through all the details of this product. Weigh the pros and cons. So think about it. Maybe if you were to stay at home for an additional 8 months and save, you may be able to do it by yourself. The pros are very, very strong, but so are the cons. So make sure that you understand the pros and cons. Speak to a mortgage advisor and a solicitor to ensure that it's a right fit. Have a clear path for the future and open communications with all parties. So you want to make sure that it's people that you will be able to talk to, ask questions, and ensure that the process goes smoothly and it doesn't ruin any relationships. If you have any questions, you can always message me. My name is Anthony Lindsay. We can discuss your specific situation. It's always good to have a conversation where your specific questions are asked and answered. Quite often, I find that people will ask a general question. The general questions don't help. Because if you come to me and say, well, do I qualify for this product? And you give me general information, I may say no because I don't have enough information. Or I may say yes, and then later we find out that actually you don't qualify for the product. So book a consultation, have the conversation, be open and honest with your broker. This is probably one of my biggest pet peeves when someone approaches a mortgage broker, in this case me, and says, listen, I'd like a mortgage, and they're giving you information and you just know that there's something that they're not telling you. I've been doing finance for over 30 years. So from a forensic perspective, I can usually put things together by looking at somebody's finances, by looking at their credit report. And that's a positive and a negative. So sometimes I'll look at someone's credit report and I'll see that there's something on there that doesn't match with how they manage their finances. So I might be the one that finds that there's a missed payment. I might be the one that finds that there is an outstanding balance or a default. Because after a while, you start to be able to see patterns in the way that people manage their finances. And remember this, banks do the same thing. Banks have a lot of systems, and now with open banking, banks can speak to each other. Banks can even, with your permission, access the information they need. So you don't always need to upload information. Some mortgage brokers and some CRMs that mortgage brokers use, you'll be able to just log in, give access via open banking, and then they can access your last 3 months bank statements and things like that. What the banks are looking for on your bank statement is outgoing. They're looking for frequent things that are coming out. They're looking to make sure that the pay slips that you provide line up with the money going into your bank account. So I would challenge everyone to make sure that when you're speaking to your mortgage broker, even if you don't think that something is important, but it's concerning you, make sure you tell your mortgage broker, because we will be able to find the right lender for you. I've had clients that have come to me who have had defaults, bankruptcies, IVAs, have missed payments, have had mortgage challenges in the past, and I've been able to place them with a specialist lender who will be able to give them a mortgage. As you know, the specialist lenders are potentially going to charge a higher interest rate, and they may charge a higher product fee. But if it's a way of getting you on the property ladder or getting your remortgage done to get you through that period of time, that's probably a thing worth considering. Because when you remortgage, as long as you've managed that mortgage well, you'll then be able to remortgage with one of the main street lenders. So what you don't want to do is have issues, end up with a specialist lender, and then miss payments with the specialist lender. You want to make sure that you manage that account well, that you make your payments on time. Banks are not your enemy. There's not someone sitting up in an office somewhere just waiting for you to slip up. In fact, most banks have so many different programs and systems and strategies to ensure that you can keep up your mortgage payments. They have payment holidays. Just make sure you speak to your bank if you are having any financial difficulties. I worked in pre-litigation and collection for several major banks for many, 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 many years. And I can tell you firsthand that banks aren't trying to take your home. Banks don't want you to miss payment. So if you're having problems, it's always good to be open, honest, reach out to the bank, let them know what's going on. That way they can offer you the very best solutions. Each month on the first and on the second Wednesday, we do these property chats. This is where we talk about products, mortgages, strategies that are all property related. We answer your questions. So if you are a first-time buyer, a property investor, or someone that just wants to understand more about how mortgages work, this is the place to be. Be sure to like, share, comment, and tell friends about our monthly property talk. I appreciate everyone listening, and we will see you next time. My name is Anthony Lindsay, and I've been in finance for quite a while. I'm here to answer your questions, and my details will be in the description. If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description, and I've been in finance for over 30 years. I've done